Hello and welcome to today's corporate webinar with Smartkarma. I'm your host, Maliha Hadi. We have an exciting discussion planned for you today, so let's jump right in with introduction to our panel. We are joined by Wee Hur's Chief Investment Officer and CEO of Wee Hur Capital, Goh Wee Ping. Wee Hur Holdings is a Singapore-based multi-asset investment and development company with over 4 decades of operating history. It was originally established as a construction contractor, but since the company has diversified across several segments, including property development, workers' dormitories, student accommodation in Australia, and real estate fund management, and further expanding into alternative investments. Joining us also is Smartkarma insight provider Garreth Elston. Garreth is currently the managing director at Golden Section Capital and possesses over 2 decades of international investment experience. It's great to have you both with us. We'll start the webinar with Wee Ping walking us through a company presentation, after which he will engage in a fireside chat with Garreth. We are taking live Q&A for this webinar, so I would request our attendees to post their questions in the Q&A tab at the bottom of their screens. During the webinar, we'll also share some links on how you can connect with Wee Hur Holdings and read more research by Garreth, so please do keep a lookout for messages in the chat box. It's great to have you both with us today, so let's dive right in with an introduction to the company. Wee Ping, the floor is yours.
Thank you so much, Maliha. I'm very honored to be here, invited by Smartkarma to do this webinar and the fireside chat with Garreth in a short moment. But let's jump right into the presentation. My name is Wee Ping. For many of you who don't know me, my friends call me Weeps because weeping is like crying. So that's an easy way to remember my name. And let's go to the next page. So Wee Hur's business today, under business overview, if you look on the left-hand side, these are the key business segments. We started right in the middle, construction, from 1980. The business was founded by my father and five other brothers and brother-in-laws. And then when they got listed in 2008, which was 28 years later, two other brothers joined them as the founding shareholders of Wee Hur. And then since we got listed in 2008, that was the start of our transformation journey, where we went from strength to strength, going into Singapore properties, doing build-to-sell industrial, build-to-sell condominiums, and then we went into workers' dormitory as well in the early 2010s, and we never looked back. In parallel, in 2014, we then went into Australia, again putting on the developer hat. And of course, I think it's no secret that we developed a rather successful student housing platform, which we eventually brought in GIC as our partner in 2022. And then together, we divested that portfolio to Greystar in 2024, thus finishing our 10-year recycling plan. Capital recycling plan. And then along the way, and I guess this is the topic for today's discussions about operating capability. Right along the way, as we developed the student housing as assets, we also then went into managing funds as well as being an operator. So that is all housed under the management platforms, where we have the real estate fund management capability and also hospitality operations capability, which I will touch on in the further slides. And finally, we do have a small carve-out for private markets investments, looking at generally private equity, private credit, and venture capital. These are outside of our real estate core expertise, but making investments in these private markets do allow us to see what's beyond the horizon, and allow us to increase the network that Wee Hur has, and be able to ride the possible tailwinds over the next 2 decades. Okay, next page. So this slide particularly talks about operations. So as all of you may know, currently the operating real estate that we have are workers' dormitory, student housing in Australia. We recently announced our entry to Hong Kong for student housing as well. And all of you may know that we are developing an international school, and together with the operator, we are JV partners, and it will be ready in 2 years' time. We also bought Hotel Miramar with our partners, and we have appointed DoubleTree Hilton as a rebranded operator. So as all of you can see, we are going into more real estate with very operationally heavy requirements. And this page really talks about how operations unlock value, because you with good operations, you can enhance your occupancy. Specifically for student housing, in Australia, we have strong marketing on the ground, great university partnerships that bring students in. And our team is very fast and responsive in the leasing that turns interest into signed bids. And of course, the journey doesn't end once they sign the lease. Once the resident checks in, they usually stay for anywhere between 6 to 12 months. And therefore, it's very important to allow them to have a very good resident experience, so that they will have a chance to continue to stay with us and renew their lease. At the same time, operations also enable us to unlock a pricing power. Residents definitely pay a premium for service and community. And on top of that, with our location, offers convenience, safety. For example, all our lifts, we require card access to be able to access individual floors, and people value that. And therefore, we're also seen as a reliable student housing asset and operator. And that definitely supports a stronger rental performance. And last but not least, the resident or the tenant experience, right? All the way from the first touch point on our website, when they make a booking, and all the follow-up emails that we send to them after that, all the way till they do the actual check-in on the property, and all the way until they check out of the property. We do employ heavy technology at every step, and also ensure that the service is top-notch at every step. And this is the whole complete resident experience. And with a good tenant experience, it definitely builds loyalty. And then they will ask their friends, right, to join them on the property as well. So this is why operations are very important in this kind of specialty niche asset class. Okay, next. So next slide, I would love to introduce everyone to Y Suites. Y Suites is our in-house student housing brand that we are using in Australia, and then now we are exporting the expertise and the brand to Hong Kong. So what are some of the highlights, right, that we would like to share with you today? Our recruitment and engagement is extremely strong because we have direct channels internationally in China and the rest of Southeast Asia with some of the platforms and the education agents, and also good ties with universities. As mentioned just now, resident experience is very important to us. We have our Y Suites community engagement program for the students. Almost every single day, there is something going on in the property. It can be yoga, it can be a pizza party, it can be people coming together to make delicious lasagna. If you can think of it, they probably have done it before. We have AI assisted service as well to really handle simple chat requests. Generally students that we receive are 18 to 22 to 25 years old, right? So they are very technology savvy. They love interacting with our AI assisted chatbots. And also, this also leads to mobile booking and check-in. It's frictionless. We used to, when we started our first asset in 2018, make students wait. I'm not embarrassed to say this, but it could take someone up to 2 hours, right, to wait at the front desk to check in, because there was a lot of heavy paperwork to be had. But today, it can take as quick as just 2 minutes because everything is settled before they check in. So we've already achieved that. And definitely, digital payments, are a necessity, and I'll say it's the basic standard in all our student housing platforms. We do not receive any cash in all our student housing assets. And then, the results, we often have very high occupancy when we first open the property, very high NPS scores, resident satisfaction, and 35 to 40% renewal rates across our Australian student housing assets when the market rate is about 20%. And then, of course, we have some other recognition from accreditation parties and some awards, which you can see on the right-hand side. And of course, the next assets that we have on the next page, Pioneer Lodge. Pioneer Lodge, we are very proud of it at 39A Sunni Road in the Jurong area, Jurong West area in Singapore. This is our second purpose-built workers' dormitory featuring 10,500 beds. It is important to talk about the improvement loop because we are a developer, we are a builder, and we are operator. And that's how we can develop a lot of insights and have this very virtuous, positive cycle of improvement feedback loop, where we always get feedback on the ground from the team on the ground, and then we feed it back to the team that are doing the development and the construction, and in the student housing case, sales. And then all of us will decide, how do we improve, do pros and cons, and do operational studies. And then we make sure that for the second project that we do, all these are implemented. In the fireside chat later, I'm happy to share concrete examples of what this feedback loop and continuous improvement loop has led us to be better and better as we go into our 10th PBSA project in Singapore, in Australia. Okay, I only just have one final slide, which I probably it's just kind of just a summary of what I've mentioned just now, and what this means for in investors, right? We are developing a lot of recurring income assets, and with our operating capabilities and development and construction capabilities, we are able to provide and unlock a lot of value with our real estate assets. So thank you. That was a short presentation, and I look forward to interacting with Garreth in the fireside chat.
Thank you, Wee Ping. Thank you for walking us through that presentation. So we'll dive right now further into the next part of our webinar, which is the fireside chat. So Garreth, over to you.
Thank you very much, and certainly a very interesting business and very different from most of the ones that you typically see operating in Singapore, which I think is fascinating for us to find out a little bit more. So diving right in, investors typically evaluate real estate, and they tend to anchor on location, valuation, occupancy, and asset value. So in your experience, Wee Ping, where are you seeing the operational execution producing materially different outcomes from otherwise similar assets? So kind of what is really different in your business that you're seeing?
Yeah, I think like a real estate 101 teaches us about location. So I think that is still the fundamentals and the truth. But with some operating capabilities, we are able to make some key differences. For example, how fast are we converting leads into leases? For example, resident experience. For example, how do we manage revenue? How do we manage our cost? And our ability to adapt to changing customer needs. That is an important point, because ultimately, this is kind of like a B2C business, right? You're serving every single resident, and all of them have different needs. And if you have the ability to personalize the experience to a majority of them, then you definitely have an edge.
Excellent. Thank you. And then, student accommodation, it's generally filed under general real estate, sometimes residential. People, I think, don't understand it as much as general real estate businesses. Why do you describe Wee Hur's purpose-built student accommodation as an operating business? And which capabilities matter most to the company's performance, do you believe?
Yeah, I think that's a very good question. because we are trying to build a long, I mean, for the student housing to really work and perform over the long term, you really need to create a very good, long-lasting impression, right? Because these students are going to check in, they stay for 6 to 12 months, and when they check out, they may tell their friends, they may tell their juniors, right? And if you haven't done a great job in managing the tenant experience, then you'll find that over years, and as an asset owner, you may not be aware of it, but the reputation can spread in other markets that you just don't have much presence in. So because we're trying to build a very good reputation and a long-lasting business, the entire journey of the resident and the touch point with us is very important. And this is why the operating capabilities come in. And this includes things like student recruitment, leasing execution, customer service, community engagement, and technology platforms.
Excellent. Thank you. And then, student accommodation, just a question from our side on occupancy quite often is that in different markets, a lot of investors here will be Singapore, some will have international. Every market is quite different in terms of the terms that students actually stay in. So I know within South Africa, at times we'll have 2 months vacancy that some of the student accommodation providers have. North America, at times you can have up to 3 months. In Singapore, what does it typically look like? In Australia, if you can comment on that too, what is it typically looking like your accommodation occupancy through the year?
So I think the way to think about it is, what are the alternatives in the market? So assuming there are no student housing asset class in Australia, international students, they will generally have to rent a private apartment. And the landlord of the private apartment is not going to be, because you're an international student, I'm going to let you stay for just 10 months, and then you can enjoy your holiday back at home in China or India, right? And so the market standard is, if they are signing for 12-month lease, they will just stay and pay for the 12 months. They may leave when they finish their exams and they go back home, but they continue to pay the rent. So that is the norm in the market.
Okay. And in Singapore, what are you typically seeing with your students that are staying? So they typically have a 12-month contract with you, or was it month to month? How does it typically work?
No, correct. It's the same as well. It kind of just tax very similarly. Generally, I think across the globe is quite similar. Some countries may accept 48 weeks instead of 52 weeks. But they're just small differences and nuances.
Yeah, so I know within our market here is typically most of the student landlords will lose up to 2 months of rental within it, and it's very difficult to rent out. So it's quite interesting to be able to have that billing for the occupancy. And that leads me into my next question. Many investors typically will assume that occupancy is a function of market demand. But how much of this is within the operator's control, and what levers do you believe manage the most, whether it's leasing execution, marketing, the partnerships that you have with universities, referrals from friends, these type of things?
So I think that statement, function of market demand, I think that's true. But I think within that umbrella, I think people have to understand, for different operating real estate, where are the channels coming from? For example, as a student housing operator in Australia, how do I get students in, right? And there are different channels that we go to, right? There is what we call the direct sales channel. That's all the Google ads and stuff, and that's generally for countries that can access Google, number one, and for students who are already in Australia and they're looking for accommodation, right? So those are targeted at them. And then secondly, there are the indirect sales channels. Think of it like the OTAs, but in the student housing sector. You have hotel.com, bookings.com, agoda.com, that's for hospitality. And then, there's another set of platforms that are specialized for student housing. So those are the indirect sales channels. As operators, we give them a commission and then they place students, right? And then finally, is the renewal. So existing residents living on the property, and we attempt to convince them to renew. And I think I mentioned just now, our renewal rates are typically pretty high, right? Just above market. We are 35 to 40%. So all these are what are within our control, and we can play a big part, in optimizing and maximizing sales from these different channels. Yeah. So this is without the operating capability, it's very hard for someone to understand and execute that.
And do you also use a lot of technology? We see it a lot with the self-storage players. Is typically they have very strong internet links with Google and that. So whenever anyone is searching for self-storage, there are links that they use quite effectively on it. Are these type of tools available, and do you use them as well within your business?
Yeah, so again, this for student housing in Australia, a lot of our residents are from the international community, and I wouldn't hide that a lot of them actually come from mainland China. So Chinese students, unfortunately, they can't access Google in China, right? So there's no way they can be targeted. There's no way they can go to domain.com.au and search for private markets. And hence they rely a lot on some of their platforms, right, to look at what are the available accommodations. They also rely a lot on the social media, Little Red, Xiaohongshu, to look at reviews. So those are the channels that we will focus on. Again, this is through many years of experience of understanding the clientele and the type of residents that will stay on our property. Yeah.
Okay, it's very interesting. And it leads me to my next question, which is,
Yeah.
you can have in a market where you have two student accommodation assets literally in the same city, it can achieve very different rentals between different buildings. And what role do you see the residents' experience playing within building pricing power? And how do you go about? I mean, you've mentioned it a little bit. If you can build out on that, how do you keep growing and building on that and leveraging that to go to the bottom line?
Yeah. I think there are multiple powers at play, right? I think obviously resident experience is important, but whether it has that much of a pricing power, uh, I think that does take quite a few years to play out, right? There is there's a very good brand in the Europe called Vita. They've done very well, but I think there are the other powers at play, can be things like although you're in the same city, you can be in different location, right? And so some students are willing to pay for convenience, safety, community, and this is where it becomes interesting as well. Even if two assets in a similar location and they all have the similar convenience and safety and community and reliability, the interesting thing about this operating capability, a part of it is how are you able to communicate what you have in the asset to your potential residents. And that's where we have a large presence in China. We have about 5 or 6 staff and team members, right? And they are the ones who are responsible to educate the market, teach the market, and be our mouthpiece when they interact with parents and students there. And so then that becomes an entirely different value proposition, right? And because we're able to reach the potential residents and tenants and be able to communicate what we have, and we may be very similar to the one next door, but because we know how to do that, and therefore we get the resident first. Yeah.
Excellent. And thanks. Just before I move on to my next questions, just to remind any attendees, if you have any of your own questions, we do have some starting to come through. Please use the Q&A forms that are on the interface, and please send them through. Definitely would also like to hear from you too. And building on what you were talking about earlier, as well as why you mentioned the amount of technology that you've started to invest in, especially your AI-powered customer app, self-support check-in, digital payments. How do you find these lifting the resident experience and your operating efficiency? Because obviously it's always nice to have these, but do they come down to the bottom line, or is it more of a experience and a retention and a loyalty tool for the business?
Yeah, so I think there are a few angles to this, right? Firstly is the financial angle. Australia labor is very expensive. So therefore, we need to ensure that whoever that we hire on the property team, that time is doing a lot of high leverage outputs, right? And in running a student housing asset, or maybe running a hospitality asset, there's a lot of very administrative tasks on the ground, right? So having technology to solve or to execute all these lower level tasks will enable us to optimize, the labor to do higher value tasks. So I think this is number one. And number two is the population that we're dealing with is young, right? As I mentioned, they are between 18 to 25 years old. So they do expect a certain level of technology to be implemented, right? In fact, if today or in a few years' time, if we are still, demanding a lot of printed, what is your certificate of education, print out your IC and stuff. I think, we will definitely be lagging behind. So they do expect a lot of digitalized experience, seamless experience. So that becomes a base expectation. And definitely from a productivity point of view, the traditional way of managing, a portfolio is, from owner point of view, you look at sampling, right? I've got 1,000 transactions or 1,000 invoices. How do I know the team is doing their job in checking through all this? I pick a sample of 5%, that's 50 invoices, and I check them in detail. But that comes down to luck, right? You may pick 50 very clean ones, but there may be 50 sitting in the remaining 95% that has a problem, right? But with AI, we are able to look through 1,000 100% check and categorize them into expected, like green, yellow, and red, and then we put all our resources to look at the red. So this radically transforms how we look at managing the asset without increasing the number of people, right? Just by using technology. And just other things like CCTV, right? You have a CCTV there for deterrence, but also for evidence checking. But to find out who threw that pillow down the rubbish chute, takes hours of just sitting down in front of the camera and just looking through the footage. But with AI-powered CCTV systems, all you need to do is to prompt the CCTV, for the past 12 hours, tell me who is the one, right, that threw this pillow down the rubbish chute. Right? So that is like a 2 minutes thing. So that's why we are investing and looking heavily into using technology wisely, right? In slowly to replace or enhance some of our workflows and also hardware in the asset.
Great, excellent. Certainly a very different asset class to how most people operate and what they're exposed to. So it's always really interesting to understand the different realities that you deal with.
Yeah.
Pillows down a garbage chute, I can imagine, can be quite a problem, and students, as we all know, can do crazy things. Broadening a little bit of my questioning now is operating capability starts well before an asset actually opens. And you have an integrated construction and development, a lot of experience over many years. How does this shape your design, thinking, your delivery, and ultimately how your assets perform once they are up and open and running?
Yeah, so I think this links back to what I mentioned in my slide, the continuous improvement loop. We actually have like a PBSA Center of Excellence that is being curated at the moment, where we have participation from property management, from sales, from facilities management, the development team, and also senior management like myself. And just looking at how to systematically turn feedback into action and into the next project. And this initiative was really through many years of projects that we have gone through. And we have found that by incorporating feedback, back into the assets, residents have an extremely good experience. Let me just bring up one simple example. So in all our rooms, in all our student housing rooms, the standard configuration is a desk, a pinboard, and then a shelf on the top, right? And that is the study table, right? So for the very first asset that we designed in 2016, that was in Brisbane. We found out through operations and through feedback on the ground that generally students, when they do stuff on the desk, they love to put their legs on the wall, underneath the desk, right? And that creates a lot of stains and black marks on the wall, which in Singapore is fine, right? Because it's just cheap for us to just paint. But in Australia, painting is very expensive, right? And we were shocked when we wanted to clear all these defects. It was like $150 for the first wall, and then $50 for every wall. So that was too expensive for us. So we decided in all our future projects that for every desk on the wall beneath the desk, we'll put a vinyl, right? And that has solved that problem completely, because you can put your feet there all you like and we'll just clean it. And the same goes for the desk. We used to have the pinboard that sits all the way down to the desk. And students being students, they love to spill things, right? So they'll spill soda, they'll spill coffee, and then we have to then replace the pinboard every time there is a spill. And the pinboard is expensive and it's very difficult to replace. So what we did in all future projects, we have the desk, and then we have 150 millimeters upturn of the desk up, and then so the pinboard will sit on it. And if the student spills anything, it's just spilling the upturn, and it's just easy for us to clean. And then there are many of such examples that, because of the feedback and observations on the ground, that we have put into our project requirements for the next project, right? So now we are doing our 10th project in Adelaide in Australia, and it is entirely different and a much better improvement as compared to the first project.
Great. And then just sort of to move a little bit left field. So a lot of international investors will also not have any real experience on worker dormitory type products. And if you could expand on that a little bit as to how they work, how they operate, whether it's very similar to the student accommodation, so it's a natural fit, or what it is that really drives these, and what they kind of offer, and what the residents demand of these, because it's an asset class that I think a lot of people have no real experience of at all.
Yeah. So the key difference between like student housing and workers' dormitory is that one is a B2C and workers' dormitory is the B2B business. We actually sign contracts with the company to house their workers. So that changes a lot of things, because whatever I talk about, the journey of booking, all these are not relevant at all. And when you're dealing with businesses and companies, fortunately or unfortunately, right, I think like price and all these are kind of more important, for them. But of course, as operators doing workers' dormitory, and I think also with some of the limelight that we have received in Singapore regarding how like the treatment of our migrant workers, their mental health and their well-being. We recently conducted a site visit together with the Singapore Exchange, and the turnout was like 20 to 30 different parties. There were finance influencers, there were buy side, there were sell side. I think everyone was pleasantly surprised at the quality and the standard of the accommodation that we were providing at our second dormitory called Pioneer Lodge, that is in Jurong. So I think the standard has improved a lot, thanks to the government continuously to pushing it. You now have apartments, they are not overly congested. Everyone has in situ bathrooms, and they are not all sharing one big toilet at the end of the corridor. Right? They also have their own cooking facilities within each apartment, and they have They have their own private spaces. They have their own cabinet. So things and on top of that, the amenities are plentiful too, right? We even have a gym. I know people ask us, they are doing a lot of hard work under the sun. Why do they still go to the gym? But we do have some of our migrant worker colleagues still liking to go to the gym during the weekends. We have cricket courts, we got basketball courts, we even have beer gardens. So I think the standard today, and that's why I dare say today is really purpose built workers dormitory. Compared to 10 to 15 years ago is it's very different.
Great. And the relationships you have with the companies, so when they are taking these dormitory spaces, what are the sort of lease terms that you are typically doing with them in terms of term, time, and then also are you providing everything that comes within each of these accommodation type units, or is it a triple net type lease from the company? How does it actually work?
Oh, so the lease profile will be quite similar to students. Usually we take a maximum of 1 year, right? Because we do want to have the ability for rental reversion year on year. And usually it can be all inclusive, right, of utilities and whatnot. But we have experimented with different models that the company will bear some of the utility costs as well. But it's kind of quite simple. And both models work. Yeah, it's quite transparent in the industry.
Okay, great. Thank you. Now, just to chat a bit about some recent corporate action is you partnered with the GRC on Fund One, and
Yep.
you've recently completed your pretty impressive landmark Grey Star exit.
Yep.
Beyond the bricks, what do you think institutional investors were really backing? And how much of the value that was realized at exit reflected the operating platform you'd built around the assets rather than the assets themselves purely?
I would say it's a good mixture of both, right? Because the truth of the matter is that without the asset, I've got nothing to operate, right? Without the good operating capability, I wouldn't have achieved great, financial occupancy outcome on the asset. So these two have to come hand in hand together, right? It's either I develop the capability, the end-to-end capability, or I find a good partner as an operator, right? So, but we just kind of decided to go down the path of building up their own capability. So I think institutional investors like GIC, and then amongst many things that they look at, I think specifically for student housing, I think that operating capability is extremely important. Right? There are really a lot of questions, asked, about all the details and all the processes that we have in-house, right, to really execute and show this operating capability.
Thank you. And then Wire Suites, as you mentioned, has recently expanded into Hong Kong through One Bedford Place, second asset there too. What gave you the confidence that the capabilities that you built up in Australia would transfer into a new market? And what have your learnings been thus far? It's always a learning experience with these expansions.
Yeah, let me share some quick tidbits about the market. So in Australia, we collect rents every fortnight in advance, right? Like that's the law in Australia. In Hong Kong, you can collect 1 year in advance, right? So you're basically collecting for the entire year. So I think that's one key difference. Secondly, the similarity between Australia and Hong Kong is that, again, I think a large portion of the international students in Hong Kong universities, and therefore our target market for the student housing assets that we are going to build up in Hong Kong are from China, right? And that's why it was quite easy for us to transfer and expand those particular sets of operating capabilities from Australia to Hong Kong.
Great. And then we have an audience question. So I'm not sure if you can comment on this, but so they did mention that when you did the Bedford Place acquisition, there was no disclosure on the price, and there was apparently media reports of it putting around $750 million.
Yep.
Can you confirm this
Mm.
or not? And then is the acquisition complete? And
Yeah.
has the title deed been transferred to Wee Hur?
Yeah, we are unfortunately unable to confirm this because we are buying this off the bank liquidator. So we
Yeah.
are it's quite a strict confidential process. But I can mention that the acquisition is not complete yet. But it should be done within 2 months.
Okay, excellent. Thank you. And then as you're expanding across these markets, are you ultimately building a portfolio of assets or a scalable operating platform? And what is your success going to look like over the next 5 years for these initiatives?
Yeah. I think if you look at I mean I think there are many ways to answer this question. But if you look at the who's who in the market, right? There are people that specializes in US, student housing, people who specialize in UK, Maple Tree and blah blah blah. And then if you look at Asia Pacific, so firstly, US, Europe, Middle East, whatever, these are not in our radar. So we're really looking at Asia Pac. If you look at the players in this region, uh, most of us have student housing in Australia. And they are practically not much anywhere else, right? Hong Kong is kind of the next one that is up and coming, right? So I think our ambitions is, based on where we are, our location, and our desire and our ability to just look at new markets. I think in 5 years' time, what success looks to me is, we have student housing assets in Australia, in Hong Kong, maybe in Singapore, maybe in Malaysia, really a regional student housing player. Whether we do that by, kind of just asset light or asset heavy, I think that depends on the specific opportunity set as well. The good thing about Wee Hur is, we can do both, right? We can do asset light, we can do asset heavy. But I think the common goal, the commonality is we kind of want to then be a regional, the one and only regional player, right? That has diversified portfolio across the region in student housing.
Great. And then just a clarification question from our side is you mentioned that in Hong Kong you can receive rentals paid yearly in advance. So how does that typically work within the market? Are those universities paying you or
No, students, it's a
governmental
B2C,
things or
it's a
students
B2C
directly?
business. Yeah, it's a B2C business, same as Australia.
And do the students typically finance these or they literally save up for the year before they get through? Because I can imagine that's quite a large financial commitment for students. But
Oh,
it's from a risk point of business, I think it's great from your business that you can actually achieve that.
that's where you may not be aware because we have to remember who pays for the rent. Yeah, it's the
Yeah.
parents. Yeah, yeah. The parents are the one paying, right? And it's like Toys R Us, right? The kids go there and buy and stuff, but the parents are the one paying. So the parents are the one with the purchasing power, right? I think they are already well versed and they are well understanding the market. This is the market norm, right? Paying the rent 1 year in advance.
Okay, excellent. And because I know locally with most of the student accommodation within the market here is actually government grants that through pay for the student accommodation. Is there anything similar within the markets in which you operate, or you purely there's no government into things you're dealing with your direct customers directly?
No, it's generally just a commercial.
Okay, because I imagine that would take a lot of risk out of the operations. And within Australia, where it's more traditional type of payment, as you mentioned, what are your collection rates like there? Do you find that typically most of the students are obviously very reliable, or do you have any issues? And if you do, how quickly do you deal with those?
Oh, yeah, the delinquency rates are very, very low. Again, it's the function or representation of the markets that we're dealing with, right? I mean, where the students are coming from. Generally Chinese students, Southeast Asia, or like Asian students, I think they're generally fine. On the occasional one or two, it's I think across the 10 years that we have been doing this, we have very seldom come across, a student that has willfully not been wanting to pay or like they just disappear. There have been one or two cases. But generally it's because they are in some kind of financial issues, and then we try to help them out as much as we can.
Great. And within the workers' dormitory type operations, are those also the companies will be paying you monthly, or how do they typically pay for the facilities they
Yeah,
use?
those will be monthly. Right? We send them an invoice, and then they'll pay us, and then we move on.
And the type of companies I'm assuming you deal with are typically going to be large, well capitalized, extremely reliable payers. So your cash flow is very stable, I would
Yeah,
assume, from month to month.
I mean, it doesn't have to be what you describe, like well capitalized or what, because it is mandatory for all these foreign workers who are brought in and approved by Ministry of Manpower to have a registered workers dormitory address, right? So if they don't pay us, unfortunately, we'll have to evict, and then take their name off our list. And then that will be a red flag for the Ministry of Manpower. Right. So generally, people pay up. Sometimes again there needs to be some payment plans, right, to help out some smaller companies. But generally, that's not an issue for us.
So typically your cash flow is almost like an infrastructure type operation more than a standard retail or office type landlord, and is quite resilient and defensive from what I can hear.
It is pretty defensive, and we can see our occupancies, pretty much 6 to 12 months out.
Excellent. I think that probably gives a lot of comfort to investors as well as analysts as well. Another question in from our attendees is, how is management prioritizing your execution bandwidth between the markets that you're in now, between Australia, Hong Kong, and Singapore? And how is your team structured to respond to deal effectively and quickly across these three very large and very deep markets?
Yeah. So firstly, these are all real estate, right? So not a lot of difference. Secondly, Singapore and Australia, we are very familiar already, right? And I look after the Australia market. I've got a colleague that looks after the Singapore market, right? So that's kind of two different two full-time person looking after two different markets. Hong Kong is new to us, but again, it is also not too difficult at the moment because we are doing student housing. It's a real estate transaction, and we've got some partners on the ground that are helping us as well. So this is how we also like to kind of de-risk our execution risk, that we do things with partners. Obviously, Australia was a bit of an outlier because we did everything on our own. That was quite difficult. But that was also out of certain circumstances. I'll probably not do it again. In Singapore, if you see all our projects in Singapore, real estate project, we have partners. The government land sales project that we just got in Upper Thomson, Springleaf, we have a few partners. Our international school, we have the operator as the partner. The hotel that we bought, Hotel Miramar, we have RFS as our partner. So everything we do with partners, and everyone shares the load. And then to the question, how is the team structured to respond quickly and effectively across all these different jurisdictions? We have different people directly responsible, right? So I'm responsible for Australia. For Hong Kong, my colleague is responsible for Singapore. So it's not like I one person is looking after everything. And if that is the case, I think it's a cause for concern. But we do have various people, and then of course beneath us we have an army of people just helping us looking at things.
And building on that, looking at operating discipline. So it's a slightly different question now as well. Is since October last year, when your Fund 1 assets are no longer managed by the group, how do you decide when you operate an asset yourself versus handing over the operation of that? And what does that mean for the platform's value when you keep or pass on the operating mandate?
Yeah. So good question. I think student housing, we've kind of built it up since 2016, so it was 10 years. So there really was some intent to recycle the capital, right? But because it was kind of our first foray, and our first rodeo, right? I think we did consider, whether would we do a REIT like what Centurion did, or will we sell to, or will we create a core vehicle, raise funds against it and sell to the core vehicle, or will we sell it to someone like Greystar, who effectively is a competitor? I think when we evaluated across all three, just based on cost benefit analysis and whatnot, really I think selling to Greystar, gave us, the highest amount of value at that point in time. Right. But then that also allow us to cement our track record in kind of finishing the entire cycle, right, of originating, setting up the fund, managing, doing greenfield development, all the way to stabilization and then selling it to a third party and recycling that capital. So with that track record, I think our next journey of building up and furthering the student housing platform will look a bit different, right, from the first one. And that's why you see now us, we are doubling down in Australia, we're going to Hong Kong, and we're looking into other markets, which brings us back to, that question just now about what in 5 years' time, what are we thinking about? I think this time round you will see us being a regional player, and with the strong intention and desire to be keeping all the AUM.
Right. And as anyone who's involved in property, real estate, and tenants, things often go well and it's great. And then often there are times where things just don't go as smoothly as we would like and things fall short. Could you give me an example of where you've had operational execution fall short of your expectations and what you as a company changed as a result of that? It's always difficult to talk about things that aren't great, but I think it shows the depth of what the company can do when things aren't always perfect.
Yeah. Oh, so many examples. I don't even know what to mention, right? But I always go back to our first asset in Brisbane because that was a unique one. It was 1,578 beds, right? So it was the largest at that point in Brisbane. So even the operator that we work with at that point in time also haven't had the experience, right, to manage such a large asset. So there was so many issues, operating and executional issues that came out, and the largest one was waste, right? We underestimated the amount of waste that would be contributed. Just people throwing down random things down the rubbish chute, and the team had to take hours and hours to kind of figure out where the choke was and to remove the choke. And I think as a result, and kudos to the on-site team, right, they were able to develop very innovative and creative solutions, right, like a custom making rods which were like at this angle so that they can put it into the shaft, and then do some unclogging. And then a lot of education on the ground with students as well. The second thing was, I think we also couldn't keep up with the trend of the Amazons of the world, right? A lot of online parcel deliveries that were just being shipped, and we just didn't expect that. And we should have expected, because our demographics are young people, they are from China, they are from Asia, right? But just there was a point in time where the front desk was just stacked with parcels big and small. You can't see anyone, right? And so that was when we make the expensive decision to make sure that we have digital parcel lockers, which you can see in all our assets now, right? And the whole Australian logistics are trained to use that, right? So the postman comes, they know how to put the parcel in the locker, they know how to put in the name and find the room number, and now everything is automated. So these are just some expectations where operational execution, we just didn't anticipate, but we learn, right? We learn, we improve, and then we grow, and we move on.
Excellent. And with these type of businesses that are not the traditional real estate type operations, what do you think the one thing about Wee Hur is that the market doesn't understand or underappreciates today?
Yeah. I think it's the fact that we are fully integrated, right? We are developer. I mean, we are contractor first, main contractor, and then we are developer, and then now we are operator, right? So this fully integrated platform is actually quite powerful, right? Because we get to see everything from end to end and all the way up to, and now we also have fund management capability, right? We're able to underwrite, we're able to find capital, we're able to understand what the billions and trillions of allocators in the world are thinking about. I mean, in fact, yesterday, just in the office, we had a sharing session where we got the fund management team to share what they are seeing in the market as they speak to investors, what they are thinking about the Australia student housing market with the operational team, right? The head office that is sitting in Singapore. I mean, this kind of interaction, if you are just a capital allocator, it's hard to have that. If you're just an operator, it's hard to have that too. So like the convenience of being able to just stitch all this together, to synergize and unlock a lot of value through our operating capabilities, development and construction expertise, I think is what people probably don't appreciate. And I can empathize with that, right? Because it's very easy to just say, oh, we synergize, with our development, construction, and operating expertise. But this is exactly what I mean, right? Through all the examples that we have been through just now.
And I think for my last question is, if we look again, we always love to ask as analysts what things look like on a forward basis. Between, over the next 3 to 5 years, what structure do you really would be the ideal for you, do you believe, for the group to achieve and look like over the next 5 years? And the mix really between your student housing, your dormitories, construction, and if there are any other future initiatives that you're working on that you might want to talk about at the moment, I think that would be great.
I think maybe going back to last year, right, was when we were anticipating to get back a lot of cash in April when we completed the deal with Greystar. So, we had already, strategized and discussed internally what are we going to do with all this money, right? And so whatever that you saw from then on and now and in the future, and whatever that I've been talking about, right, doubling down on student housing, pivoting back to Singapore, going into Hong Kong for PBSA, and this 3 to 5 year ambition of being a regional PBSA player is kind of anchored upon that plan that we came out last year. So I don't think that's going to be any different. But in terms of workers' dormitory, or student housing or whatnot, at the end of the day, we are disciplined in our underwriting. I'm not sure you probably don't follow the workers' dormitory market as much in Singapore, right? I think we have seen a few government land tenders this year for workers' dormitory, and the outcomes are pretty amazing, right? A huge range gap of bids, right? They are in the market. Some people are very conservative, some people are extremely aggressive, right? So, but we stick to what we think, right, we can handle over the next 30 years. So we remain very disciplined in our financial underwriting, and whether that brings us to do more student housing or more workers' dormitory, right? It really depends on what is the market condition at the time.
Thank you very much, Wee Ping. I think I've certainly got a far deeper insight into the company, where you are at the moment and where you're going. And I certainly hope that our listeners and potential investors have got that too. It's certainly a very interesting and different business to what's normally available, and I think offers some fabulous differentiation capability to investors. Thank you very much for your time and input.
Thanks, Garreth. Thank you.
Thank you very much, Wee Ping. Thank you, Garreth. I completely agree that we got some very interesting background and context from you today, Wee Ping, into the company, and it was very, very interesting to hear. To our attendees, I'd also like to thank you for joining this session live and bringing your questions to the table. For those who still have any queries, feel free to post them on the webinar's inside. You can also contact Wee Hur via the IR button on Smartkarma. We have these links shared with you as well. We will be sharing a recording post the webinar on the webinar inside on Smartkarma as well, that you can view at your leisure. So with that, I would like to wrap up today's webinar. Thank you, both of you, and have a great week ahead.
Thank you so much, Maliha, and Smartkarma for inviting me. Thanks, Garreth, for all the wonderful questions. And I look forward to interacting with everyone at some point in time. Thank you so much.
Thank you. Have a nice day.
Bye.